Verizon is once again in the news, this time after announcing a $20 billion acquisition of Frontier Communications parent. Yes, that is the actual name of the company. Ticker symbol is FYBR. But what this really does is it gets Verizon into more of the fiber line business. And I think this is a pretty clear strategy for Verizon. They are going to be bundling more and more of their services together. They don't want customers just getting cell phone or smartphone access for their wireless service. They also want to be in the broadband game, and that would include bundling streaming subscriptions. This is something that has been a clear strategy for Verizon over the past couple of years. They've moved into more and more fixed wireless broadband. That's where you're offering 5G to customers for their home or business broadband. This is something I've been using for a few years now. The other option is to go into homes with a broadband connection, and fiber is really what's getting a lot of growth. So that's really the strategy, but I want to go through the details here today and how this could impact Verizon. There wasn't a huge positive reaction for Verizon shares since the deal was announced or rumored, and that really started on Wednesday. But I think long term, this could be the right move for Verizon, even though the price is a lot to pay for the assets that they're getting. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's look at the details. Here are the details of this deal. Verizon Communications and Frontier Communications parent today announced they've entered into a definitive agreement for Verizon to acquire Frontier in all-cash transaction valued at $20 billion. This is going to expand Verizon's fiber footprint. I'll get to some of those details in just a second. And also expands Verizon's intelligent edge network for digital innovations like AI and IoT. So there's both the consumer side of this and also the business side of this. This is where, if you think that there's going to be a lot of growth in basically edge artificial intelligence, where you're not necessarily going to all the way to a centralized data center, but you're doing that kind of at the edge of the cloud. This is something where Verizon could have a pretty big impact. This is a look at the infographic that they put out. You can see that in red here is Verizon's current fiber network. Blue obviously gives them a huge amount of fiber in some of these Midwestern states and also in states like California, Nevada, Utah, and Arizona. Frontier had expected to get to 10 million fiber homes connected by 2026, up from 7 million today. There are 2.2 million actual fiber subscribers across 25 states, and over half of their revenue and 65% of EBITDA does come from fiber. But the financials aren't quite as good as they might seem, especially given this current valuation. This is a chart that shows total revenue for Frontier Communications parent. You can see that that was down to $5.8 billion in the most recent 12 months, and they were actually losing money. Now, of course, like most of these deals, there is expected to be $500 million in annual run rate cost synergies, so that would offset some of the purchase price. But I think really the deal is that Verizon is trying to bundle more and more services together. My Home is really what they're leaning into right now, and this is what they're featuring on My Home. And this is no surprise that bundles like Netflix, Max, the Disney bundle, Apple's products, there's some shopping options. They would be happy to help. They would be happy to sell you any one of these digital solutions if you have a smartphone connected to Verizon and now also have broadband connections. So content would really fill out that and create a pretty powerful bundle. They even say this right here in the release: combined mobile and home internet customers show increased loyalty and have improved rate of churn by approximately 50% from postpaid mobility, which is expected to improve Verizon's mobility economics. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, this is a massive deal when you look at the price, and especially when you look at the lack of profitability at Frontier. Verizon will also have to increase the debt that it has on its balance sheet. Frontier has a little over $11 billion worth of debt. That is included in that $20 billion purchase price number. So they've said that Verizon is going to actually refinance that debt, and they're going to have to take out debt of their own to actually pay for the cash portion of the acquisition as well. And that's what I think is ultimately a little bit concerning. So I understand the strategic rationale behind this kind of decision from Verizon, and management has said it's going to be accretive to both revenue and also earnings. But if you look at the company's balance sheet, this is a look at Verizon's debt picture, and in red I have the company's cash and equivalents that are on the balance sheet, about $2.5 billion as of the most recent quarter. But look at this total debt that's on the balance sheet, about $150 billion. The idea for Verizon over the past couple of quarters is that they will start using the free cash flow from the business to start buying back a little bit of that debt, reduce the risk that's on the balance sheet. This actually moves in the opposite direction. So unless there's some sort of clear fundamental payoff from increasing revenue per customer, from increasing margins, they talked about cost synergies a little bit. Can you bundle a little bit more? Is there so much upside that it's worth paying $20 billion for this asset? Moffett-Nathanson said this is only going to get them to about 13% penetration in the fiber market in the US, so not a ton of customers that are going to be impacted. So I think the bundling strategy is right, but I would much more rather see them lean into moving into this wireless broadband. I think that's much more scalable than something like fiber, which actually requires you to connect each home or each business with an actual wire. So that's going to ultimately be really expensive. So I think that's the big reason that shares were not up on this news. Strategically, it does make a lot of sense, gets them more into the broadband business. That's definitely a good thing if you're trying to bundle a lot more services together for Verizon. Helping with churn is going to be really positive for the business. But again, the price tag is just astronomical. You're paying about 4 times revenue for this business, and it's still going to require billions and billions of dollars in more capital expenditures to build out this fiber network and actually connect homes. So I think that's why you're seeing a little bit of a negative reaction from the market. Frankly, this is something that makes me question whether I want to continue owning shares of Verizon, because the numbers of their capital expenditures and these acquisitions and the debt that they're holding on the balance sheet just continue to get bigger and bigger. And while the dividend yield of about 6.5% is really attractive, that's offset by the risk that you're taking that any decline in the business is going to ultimately go to debt holders. So a lot of risk for Verizon. I would actually like to have seen them spend this money on paying down debt. If they have enough cash flow coming from the business to make this kind of acquisition, which by the way isn't going to close for another 18 months or so, that's money that they could have used to be paying down debt. And they're obviously not going to be doing that because they're buying Frontier. So a lot of moving pieces, but it just looks like more empire building for Verizon. Another area that could have potentially gotten more investment is something like satellite connections. That's something that Verizon has invested a little bit in, starting to grow with businesses like Starlink, AST, Space Mobile. But this is an area that Verizon could see growth, is connections through satellites, which would not require the same kind of infrastructure as fiber. We will see how this plays out. And like I said, it's going to be likely a few years before we really know whether this is the kind of deal that's going to add value to shareholders or not. I see plenty of risks, but what do you see? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. And thanks for watching, everybody. See you here next time.